Hi, this is James Stoke at Westpac with the London End of Day report for Thursday, the 29th of November. An up day for equities, but it wasn't always that way, with comments from the Republicans, Boehner in particular, about lack of progress in fiscal cliff negotiations. At one stage pulling the US market in particular down quite sharply after earlier gains. However, the market has since recovered. US data today was positive. We saw GDP growth in the third quarter revised up from 2% annualised to 2.7%. Now the detail wasn't so good. All of the upward revision was due to greater than previously reported inventory accumulation and stronger exports. But personal consumption spending actually slowed compared to the original report, shaving 0.4 percentage points off GDP bottom line compared to the earlier estimate, and business investment shaved another 0.1% off. So inventories contributed 0.9, exports 0.3, but there was a 0.5 subtraction from personal spending and business investment. Also, the core PCE deflator was revised down from 1.3% annualised to 1.1. That's the lowest since the fourth quarter of 2010. Pending home sales, they rose 5.2% in October. That's the fastest gain they've seen since May. Now, a pending home sale, that's basically the sale of an established dwelling captured at signing. Not all of them are seen through to completion. Nevertheless, it's a strong report and contrasts with yesterday's figures showing stalled new home sales in recent months. Initial jobless claims in the latest week fell from 416,000 to 393,000. Look, the story there is the same as the last few weeks. The superstorm Sandy saw a huge surge in claims, partly because of delays in claims being registered, but also because of many firms having to lay off workers because of the disruption, and that surge is slowly being corrected for or unwinding now. So it doesn't really give us a good feel for what's going on in the labour market in underlying terms. The Kansas City Fed Factory Index fell from -4 to -6, its first back-to-back sub-zero reading since 2009, and also the lowest reading, -6, since 2009. So another soft regional factory survey there. We've had a range of them for November. The other data today, I'll pick out the highlights. European economic confidence improved in November. It's the first rise on this index since February. And the business climate index, it also improved. It had its sharpest rise since 2010. They're still at recessionary levels, but just not as weak as in October. German unemployment up 5,000 in November. Unemployment rate steady at 6.9%. They're the highlights. I'll give you the markets then. So, the London market at the close up 1.2%. French market up 1.5%. The Germans up 0.8%, and Spain and Italy up 2%, 3% today. And the Dow at the moment is up 0.4%. The broader S&P measure up 0.6%. Gains were stronger earlier in the day, then it turned negative. It's now positive again. On the commodity markets, we've got gold prices up 0.6% at $1,729 an ounce, and gains of 2% really for oil at $88.04 a barrel, and copper at 360 cents a pound. The Aussie dollar, though, it's been a bit weaker. It's 1.044 against the US dollar. It's been sliding throughout the day, despite equities ending higher and commodities positive. The business investment intention survey that was released yesterday or last night in Australia certainly was disappointing in that there's not much evidence that sectors outside of mining are going to increase their investment spending, at a time when it looks like business investment in the mining sector is losing momentum. So that's something that will add to the case for a rate cut from the Reserve Bank next week. We get credit figures from the Reserve Bank Friday Australian time, and that's it. That's it for today. I'll be back tomorrow.